Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Friday, the 10th of May. Starting off with the FTSE 100, which is still rising like a homesick angel, and you can see that 8,500, which was our preferred destination, looks like it's not too far away now. That's the top of the upper parallel of that December rising trend channel, the red line there, and also, as I've said many times, the top of that rising trend channel from 2007. After that, we can perhaps upgrade the upside, but let's go for 8,500 now. In the meantime, ideally we stay on the right side of the 83.30 area, which was resistance on the way up earlier this week. Worst case probably now is that we have a rug pull to 82.30, but it doesn't look like we're going to get a rug pull, and obviously that is tempting fate. On to the DAX, and here stretching into new higher ground as well. The rising trend channel there from October has its resistance line projection 19,300. That's what we're looking for now by the end of this month, while we remain above the old March-April resistance around 18,600. Not expecting anything lower now than the late April resistance, 18,300, but ideally we just keep going at the moment. Moving on to the Dow, and here the situation pretty strong as well. We've had a bear trap island reversal, so gapping down there back in April and gapping up this month, and sort of W-shaped reversal as well, which is very handy. Looking for the recent highs, or the March-April highs, around 39,900, and then after that, maybe by the end of next month, up to 41,300, the top of that autumn trend channel. As far as the downside is concerned, not expecting anything lower than a potential gap fill, 38,300, but ideally we stay on the right side of that now, rising 50-day moving average. RSI at 64, so not overbought yet. Moving on to Bitcoin, and this has been slightly sticky in recent days in terms of just sort of settling into a range between 60,000 and the 50-day line around 66,000. And also that March resistance line. I want to see an end of day close really above 66,000 to be the starting gun on a retest of the highs, and a potential move to 80,000 by the end of next month. On the downside, obviously we've got the recent support there around 56,600, but we could have still a rug pull down towards 53,000, and that initial February resistance, which also not far off from the 200-day line at 51,000. Missing ingredient at the moment, really, even if you don't want to wait for 66,000, is that the RSI is still on the wrong side of 50. It's at 48. You want to see that break above the neutral 50 level. Moving on to gold, and here it's been consolidation, but it looks as though we are finding the floor of a rising trend channel there, the February one. Obviously, there's been a bit of jiggery pokery in the meantime. We had a resistance line break there around the 2320 level, and above that, looking for 2360 plus over the next few sessions, which was the late April resistance. Nice RSI bounce off neutral 50. It's argued that's a double bounce there. That does suggest that the consolidation is now over. Worst case is that we break 2280 and then head back down to the 50-day line area of 2270, but that really is the worst we are looking at, or the worst we're looking at the moment. Moving on to the stocks, and not too many. It's a rather quiet Friday, but it's good to revisit some of the recent heroes that we've had. We had Angle's target there on 23 pence, trading just below that now, but end of day close above 23, and we could be heading up to the 32 pence area perhaps by the end of this month. I'd like to stay on the right side of 20 pence just because that was the old February resistance. And remember, this is a double, triple bear trap gap reversal, so gapping up 3 times or 4 times, I think, in the recent past. Very strong situation, and probably, given the news, the shares not rising as much as perhaps they could have. Maybe they will soon. On to Asiamet, which has been a recent decent situation as well, not in terms of not just in terms of the rise, but how smooth the rise has been. Our second target there around 1.2 pence above that, which we are at the moment. Then looking for 1.75 pence, perhaps as soon as the end of this month, but at least going into June. The other point to note is that we now have the 200-day line rising, so it looks like we're about a few weeks away from a golden cross, and the route to a golden cross tends to be the strongest part in the cycle. Eco Atlantic's next, and this has also had a smooth re-rate as well. not a million miles away from the type of re-rate that we've seen at Asiamet, but hit our second target there around 13 pence above that. We've gapped up and looking for up to 19 or 20 pence, maybe as soon as the end of this month. But the key here staying above the floor of that gap near 13 pence. On to Goldplat, and here the situation is one of a recovery, and I suppose it looks like a mid-move consolidation. We've already had the 50 and 200-day lines rising. That should give us more momentum. Break of 9.5 pence, or 8.5 pence in fact, should see the shares head up towards the top of that broadening triangle there from February last year, as high as 11 pence, maybe by the end of this month, but at least by the end of June. Moving on to Kefi, which has been making positive noises of late, and here the shares temporarily pushing through the 0.7 pence level. There is the top of that gap there at 0.76, which we would be disappointed if it didn't happen. This is also a bear trap island reversal, so gapping down to new lows and then gapping up again. So really looking for 0.8 pence, perhaps as soon as the end of this month. And while we're above the now rising 200-day moving average at 0.62. Next up is Mobile Tornado rather. Microsalt will be next. Here you can see that we had that big spike, so it's just a matter of seeing how much of a retracement we have from the 4.25 pence level. Obviously, we're about halfway back now, so it's 50% retracement. Ideally, we stay on the right side of the 2 pence area, which was resistance early last year. So above 2, still looking for a retest of at least 3.25. Big picture target here, maybe over the next 1 to 2 months, as high as 6 pence. So let's see if Mobile can step up to the plate. But the key here is really staying above that 2 pence zone on a mid-price basis. On to Microsalt, and here, after the pullback from the better levels that we had in the wake of the IPO, dizzy heights of £1.20, we're well on our way with a new move now. So we retraced sort of approximately half the best levels, which is typical for this sort of market, breaking that line of resistance there from back in February, 73.25, and now breaking the 50-day line at 77 pence above that, looking for 105 at the top of that rising trend channel from back in February. Next contender is Polarean, which I didn't cover today in the RNS hot list, and obviously feel that I should have now. Here you can see that one of our many false dawns that we've had in the recent past for all the shares, but shares. The key here is that the shares stay above that 3.75 pence level, the old February support. While they're above that, we could have stretched to 5.5 pence in the top of that falling trend channel from February. I suppose the best case here would be to get back to the 200-day line near 8 pence, but I think 5.5 and staying there for a while would be a decent thing to do. Ideally, we close today above the 50-day line at 4.2 pence. I think that would be a good line in the sand. Stock which I was going to cover yesterday, but chickened out of, is Plant Health, and here looks as though we do actually finally have a turnaround. There's a gap to fill up to the 5.8 pence level. Hopefully that can be done by the end of this month or much sooner than that, and the shares seem to be stable above the old resistance around 4.1 pence, finding support at and above that. So that is encouraging too. So the 200-day line on the top of that channel from November, around 5.5 pence, seem to be the place for Plant Health to go. And it looks as though there's more volume in there as well, because we have as well as scrappy candles going into the latest turnaround. On to Petrel, which is also doing well at the moment. And here we can see, when I type in the right stock, that we are heading rapidly towards the top of that rising trend channel, well, the top of that triangle, in fact, from back in November. The level there around 3.6 pence, and we're expecting that to be hit any day now. In fact, we could even raise the target now and extend the upper parallel of that triangle as high as 5.2 pence by the end of next month. The key, though, is to stay above the old February-March resistance at 2.5 pence. That's what we want to see. We've had an RSI rebound at a double rebound there, above at and above neutral 50, which is also giving this situation a good look. Moving on to Tern, where apart from the fact that we've not had a fundraise, which we could have had given the share price rise, we also managed to clear the 200-day moving average properly for the first time in months, perhaps even years. Looking back, I think we haven't really been above there properly since the end of 2021. Current situation is looking for 5p, while we're above the old April resistance around 3.8. So fundraisers permitting, that's where the shares will go. It just looks interestingly strong, given the way that we had the gaps down back in January, and then a gap close, a buy signal earlier this month. On to the last two. First one is Tech Capital, which is obviously related to the Microsalt situation. Here we've gapped up off the lows, which is encouraging. Could argue that this is the bear trap island reversal, so two gaps down and then a gap higher. End of day close above the 50-day line. If we get it today, 8 3/4, takes up to 11 pence, hopefully later this month. And we want to stay on the right side of 8 pence, given that that's the floor of that rising trend channel from the turn of the year. Finishing off with Velocity Composites, and here we've broken out of this falling wedge. Bear trap rebound from below the old support there at 31 pence back in February, and break of that 50-day line and that resistance line there from June. That suggests that above 31 pence, obviously we've got the initial target there, the 200-day line, which we're just hitting at the moment, 36 pence, but hopefully as high as 46 pence by the end of this month, given the way that today we've actually gapped up, and you can see all those blue candles there also giving the impression that there's some reasonable buying in there. That's it for me today. More updates over the weekend.